I'm 680 News Senior Business Editor Mike Eppel. We saw some market reaction to the escalating tensions in the Middle East between the U.S. and Iran late last week. As things were developing, the market sold off quite dramatically. Today it was more of a mixed attitude from investors trying to figure out exactly where this goes next and whether or not there may be a supply disruption of oil coming out of the Middle East, or whether or not it's a threat to the global economy in any way, shape, or form. Today we did see the price for oil climb, but not as dramatically as some may have thought, as again, there hasn't been any specific moves in the energy trade regarding the flow of oil globally. Most recently, in fact, the larger catalyst has been a drop-off in U.S. supply levels, which might see a more balanced supply and demand ratio for the market. Goldman Sachs is telling investors to buy gold as a defensive play against any risk at the start of this new year. Gold, in fact, today hit its highest level since 2013, rising at one point as much as $28, and it's coming closer to $1,600 U.S. In Canadian funds, gold is trading well above $2,000 an ounce right now, closing in at an all-time high, again, in Canadian dollars. And we had the Canadian dollar today climb above 77 cents U.S. for the first time in 14 months, as, again, the Canadian dollar is getting a little bit of a lift here from rising commodity prices and the anticipation that, again, the Bank of Canada will stay on the sidelines when it comes to interest rates over the near term. Hudsons Bay Company was in the spotlight for much of 2019 in an ongoing battle to privatize Canada's oldest retail brand. Late Friday, one of the shareholder groups, the lead shareholder group, headed up by Chairman of the Board Richard Baker, announced a sweetened privatization bid for the HBC at $11 per share, or almost $2 billion. Now, that was the price that was being pushed for by activist investors who were looking for a higher bid for their stock. And today, the share price jumped by almost 10%. The privatization deal for the HBC will go to a shareholder vote likely in mid-February. And a new year, but new challenges for the Boeing company related to the ongoing grounding of the 737 MAX jets. The New York Times reporting that Boeing may have discovered a wiring issue in the tail section of the plane that could lead to a short circuit, two wires that are too close together. So that may further delay the estimated re-emergence of those planes onto the market. The FAA is likely going to require mandatory flight simulator training for those planes. Of course, the flight tests are ongoing. Boeing is saying today that it might have to raise some capital simply because of the financial stress that the grounding of the 737 MAX jet has caused on the company's finances. From the 680 Newsroom, I'm Mike Eppel for City News.